Hi, my name is Tessa Brown and I'm here today with my colleague John Weston to present the first in a series of short videos about IR35 and off-payroll working, which you'll find on our website. So John, let's start off with a little bit of background and context. What is IR35?
Well, thanks, Tess. It's tax avoidance legislation targeted at individuals who provide their services to an end client by an intermediary in which they've got a material interest. So it's usually a personal service company, let's call it a PSC for short, which they've set up specifically for the purpose, but it could also apply to partnerships, for example. HMRC use it to challenge instances where they feel that were it not for using, say, a PSC, the individual will be considered an employee of their client and subject to PAYE and NI.
And so why was the legislation introduced? What's the background?
Well, IR35 first reared its head in a 1999 Inland Revenue press release, which is what gives it its name. The legislation, though, actually became effective from 6th of April 2000. Historically, it's not been terribly successful, generating less than 1% of what was envisaged in some years. I think that's not least because, contrary to original intentions, it's always required the individual rather than the end user to assess whether they were caught by the rules, and by and large, they concluded not. Perhaps more significantly, however, it requires whoever does have to make the decision on status to contest with some quite difficult principles that underlie what it means to be employed or self-employed. That lack of success, yet determination to make it work and see PAYE and NI receipts increase, is why the legislation has since evolved into the off-payroll working rules. Well, at least to the extent that with effect from 6th of April 2017, the end client for whom the individual works is either in the public sector or, from 6th of April 2021, is a medium or large business in the private sector. And it's these which will be our focus.
So you mentioned these new rules and the term off payroll working. What do these new rules do that's different to before?
Well, initially, the same as IR35, they merely say you need to ignore the intermediary, the PSC, etc., that the individual is working through, and consider whether, had they instead engaged directly with the end client, whether their relationship would have been one of employer and employee. However, they then impose various new obligations, including on whoever pays the fee to the PSC to deduct PAYE and NIC. And cunningly, and this is where another significant difference arises between off-payroll and IR35, which, by the way, continues to apply where the end user is only a small entity. The responsibility for making this decision on status lies not with the individual worker, but with the end user. For them, arguably, the consequences of getting things wrong are more problematic and easier to identify by HMRC. Now, no doubt that is what's led to the increase in tax revenue of some 550 million in the first year of the reform being introduced in the public sector, and has equally likely encouraged the extension to the private sector that we're going to see from the 6th of April 2021.
Thanks, John. We're well versed in helping our clients prepare for the new rules and apply the old rules, so if you do need any assistance, please don't hesitate to contact either myself, John, or your usual MHA Larkin Gowan contact.